There was a time when power was measured in gold, when a king's wealth was weighed, not printed, when debt was a shameful burden, not a foundation for progress. But somewhere along the way, something changed. We stopped asking how much gold a nation had and started asking how much debt it could handle. And that shift, silent and gradual, redefined the world as we know it. We live in an age where debt is no longer a problem to be solved. It's the very fuel that keeps everything running. Governments borrow to grow. Corporations borrow to expand. People borrow just to survive. Debt has become the bloodstream of the global economy. But if debt is everywhere, if it powers everything, then I can't help but ask, what happens when the debt itself becomes the currency?
For centuries, money represented something real: gold, silver, labor, land. It was a symbol of trust, a promise backed by something tangible. But today, money is born not from mines, but from keystrokes. Every dollar, every euro, every yen that enters existence begins as someone's liability, a line of credit, a government bond, a debt waiting to be repaid. The story of how we got here isn't one of accident, it's one of intention. Of brilliant minds who realized the true power isn't in owning gold, but in controlling the promise of it. Let me take you back to the moment money lost its anchor. In 1944, at the end of a war that destroyed continents, the world gathered at Bretton Woods. Representatives from 44 nations built a new financial order, one where the US dollar would reign supreme, backed by gold. For a time, it worked. The world trusted the dollar, and America became the empire of credit.
But empires built on promises always face the same temptation, to promise more than they can deliver. By the 1960s, the U.S. printed dollars faster than it mined gold. Wars in Vietnam, domestic programs, political ambitions, all funded with money that existed mostly on paper. Foreign nations began to notice. France, under President Charles de Gaulle, demanded its gold back, sending ships to collect the metal behind America's promises. And in 1971, when President Nixon finally closed the gold window, the world entered a new era, one where money was no longer tied to anything physical. From that moment on, our currencies were backed not by gold, but by faith. And faith, as history always shows, is fragile. At first, nothing seemed to change. The world kept trading, the markets kept growing, and the illusion of endless wealth began to feel real. But something fundamental had shifted. Without gold to anchor value, governments discovered a dangerous freedom. They could create money at will. The 1980s became the age of leverage. Wall Street learned the debt could be weaponized, not to build, but to multiply. Junk bonds, derivatives, credit swaps, tools that turned promises into profit. The richer you were, the more you could borrow. And the more you borrowed, the richer you appeared. Debt had become not just a tool, but a new form of currency. It didn't take long before nations followed suit. Every crisis became an excuse to print. Every problem could be solved with liquidity. After all, why face consequences when you can defer them with more borrowing? But debt has a strange quality. It feels like wealth in the beginning, easy, abundant, liberating, until it doesn't. Because every borrowed dollar carries a silent shadow, the obligation to pay it back. And when entire nations live on borrowed time, that shadow becomes impossible to escape. I sometimes wonder, did anyone see it coming? History is full of warnings. From the fall of Rome, whose coinage was slowly debased until faith collapsed, to the Weimar Republic, where a loaf of bread cost billions of marks, to Argentina, Venezuela, and every empire that believed it could outprint reality. They all believed the same lie, that power could be sustained by debt.
And yet here we are, repeating the cycle. The United States now carries a debt of over $34 trillion. Global debt exceeds $300 trillion. The numbers are so large, they've lost meaning. We no longer measure debt, we normalize it. The modern financial system has become a paradox. It thrives only when it expands. If we stop borrowing, the machine stops. If we borrow too much, it collapses. So we keep walking the tightrope, pretending balance is possible when the rope itself is fraying. The irony is that the system was never designed to last forever. It was designed to survive through momentum, through belief. Because money, in its purest form, is just a story we all agree on, and debt is the chapter that keeps the story alive.
When a government issues a bond, it's not just borrowing, it's creating money through future promises. Banks do the same when they lend. They don't hand out existing cash, they create new deposits from thin air, backed only by the expectation that you'll pay it back with interest. That's the secret no one told us. The entire global economy runs on faith in future repayment. Not gold, not productivity, just faith. But what happens when that faith fades? When inflation erodes savings? When trust in institutions cracks? When people begin to realize that the numbers in their accounts aren't wealth, they're promises? That's when the mask slips. We saw glimpses of it in 2008, when the global financial system nearly collapsed under the weight of its own debt. The very institutions that built the machine came to the brink of destruction, saved only by printing even more debt. We didn't fix the problem, we magnified it. Since then, every economic shock has been met with the same response: lower interest rates, more liquidity, more credit. And yet, each solution makes the next crisis inevitable, because the price of power is always debt. In a way, we've entered a world where reality is reversed. Saving is punished, spending is rewarded. Debt is growth. Growth is illusion, and illusion is policy. We tell ourselves it's progress, that we've evolved beyond the constraints of gold and scarcity. But the truth is darker. We've merely replaced scarcity with dependency. Dependency on the constant expansion of credit, on central banks, on policies that treat symptoms while ignoring disease. And the disease is denial. Because deep down, everyone knows what happens when a promise becomes worthless. History doesn't repeat, it rhymes, louder each time. Look at the numbers. In 1980, global debt was about $5 trillion. Today, it's over $300 trillion. That's 60 times more in just 4 decades. Did our productivity grow 60-fold? Did our innovation, our wisdom? No, only our addiction. We've built a civilization on the idea that tomorrow will always pay for today. But what if tomorrow stops believing? People often ask, when will it all collapse? The truth is, it already is. Not in explosions, but in slow erosion. Every time your paycheck buys less, every time rent rises faster than wages, every time your savings lose value while asset prices soar. That's what collapse looks like in the 21st century. Quiet, invisible, accepted. And yet, I don't think the story is hopeless, because collapse isn't always destruction. Sometimes it's revelation. When money fails, we rediscover value. When systems break, we remember trust. When the illusion of infinite credit fades, we're forced to face something real. The next era, whatever it becomes, will not be about who controls the most debt, but who controls the most truth. Energy, data, time, and trust. These are the new currencies forming quietly beneath the surface. You can already see it. Cryptocurrencies, decentralized finance, digital gold, desperate attempts to build systems of value without centralized control. They may fail, or they may evolve into something we can't yet imagine. But one thing is certain: debt-based money cannot expand forever. Every system that relies on infinite growth in a finite world eventually meets its reckoning. We may not know when the final bill comes due, but history tells us it always does. And when it does, the question won't be how much money you have, but how much trust you hold. The price of power was never printed on paper. It's written in the cycles of rise and fall, in the arrogance of empires that believed they could outsmart mathematics, and in the silence that follows when the printing stops. As I look at the world today, the markets, the policies, the endless borrowing, I can't help but feel that we're standing at the edge of something vast, a moment where the old story of money begins to unravel and a new one waits to be written. Maybe that's the final irony, that debt, the thing that built our world, will also be the thing that forces us to rebuild it. So if there's one lesson from the centuries of cycles, from gold to paper, from paper to promise, it's this: power built on debt always ends the same way. It begins with confidence. It grows through expansion, and it ends with a reckoning. And when that day comes, you'll understand what truly survives when money fails. Not wealth, not credit, but wisdom. The wisdom to question the stories we're told. The wisdom to see beyond numbers. And the wisdom to remember that the price of power is always paid in the end. If this story made you think, don't forget to look deeper. Question everything, especially the things we take for granted, because the next empire of money is already being built, and whether we learn from history or repeat it depends on what we do next.